A $26 billion firm published a note this week saying that Bitcoin's bear market may be entering its final stretch. Not on a hunch or speculation, they actually pulled data from the last 3 Bitcoin cycles and found a pattern that's telling their clients a bottom is close. And that's not the only signal stacking up. Long-term holder data shows the weak hands are getting exhausted, as we know. And fresh Fed data suggests the central bank may have just boxed itself into a corner it can't get out of clean. I've been sitting on a data point that I think changes the way that you read everything that's happening these last few weeks. The question is whether this is actually the pivot or just the bait for the next fake out.
Take the bait!
Welcome back to Satoshi. Let's get into it. Before I get into it, if you're new here, hi, hit the subscribe and smash the like button. It genuinely helps the show reach more people who need to hear this stuff. And share this episode with a friend today because we put together a special Simply Bitcoin 4th of July clip at the end that you're going to want to send to every single person you know. So stick around for it. Bitcoin quietly climbed from 58,000 to 62,000 this week, and nobody's throwing a party over it. Okay, I might be having a barbecue today, but the culture barely noticed. And honestly, I think that that's actually the point. The average person isn't supposed to notice, but let me start with the call itself. Cantor Fitzgerald, Wall Street Bank, $26 billion under management, published a note this week saying Bitcoin's bear market may be entering its final stretch. Their analysts looked at the previous 3 Bitcoin market cycles. Across all 3, Bitcoin bottomed at an average 384 days after its peak. Cantor Fitzgerald in their report said, ultimately, our belief is that we are only a few months away from the bottom of this pullback. Now, I want to be honest here. This is a projection, not a guarantee. They flagged macro, regulatory, and geopolitical risk as wildcards, but when the firm of this caliber puts that call in writing, it does tend to move the conversation. And on-chain data is saying the same thing. While the ETFs were bleeding $4 billion over the last few weeks, whales were buying $16.7 billion worth of Bitcoin in just 2 weeks. Yes, you heard that right. We had the biggest outflows, but we also had $16.7 billion worth of buying Bitcoin. The Bitcoin ETFs just posted their first net inflow after 10 days straight of outflows, $221 million back in the door. So something shifted this week. The culture has been quiet. The price has been super boring, painful even. The headlines have been brutal, but while everyone was looking away, the people who've been through this before were quietly positioning for what comes next. This photo from Bitcoin Magazine shows that long-term holders are also accumulating. That is the most consistent pattern in Bitcoin's history. Bear markets wash out the weak hands, while the convicted ones take advantage and continue to stack. But I want to go one layer deeper because I don't think that $26 billion asset firm Cantor Fitzgerald's call is happening in a vacuum. Jobs data came in soft this week, and people who watch the Fed for a living are starting to say what a lot of us have been waiting to hear. Rate cuts might actually be coming. The thing that's been sitting on Bitcoin's chest all year might finally be lifting. And here's what makes this even more interesting. Global M2 money supply, that's the total amount of money sloshing around the world, just hit an all-time high. More dollars, euros, and yuan in existence right now than in any point in history. Bitcoin doesn't care what currency you're measuring in. There's only ever 21 million of it. Every time M2 expands, every unit of Bitcoin becomes relatively more scarce. Historically, when M2 runs, Bitcoin follows, usually with a lag of a few months. Every prior Bitcoin recovery has been preceded by a moment like this. Not always the cut itself, but the shift in expectations. The moment the market starts pricing in relief. We might be at that moment right now, but here's where I want to push past the obvious take, because lower the rates equals good for Bitcoin is the shallow version of this argument. And there's a much more important reason that this matters. Larry Lepard, fund manager, longtime sound money advocate, talked to my husband Nico in this interview here. And I just haven't been able to get it out of my head.
The credit-based monetary system that we have is not compatible with deflation. It requires inflation. And the sooner people come to understand that, and that they understand that the Federal Reserve ought to be called the Federal Department of Inflation, and they're, and they ought to say, we inflate, make the best of it. That ought to be their motto. And we're going to lie about how much we inflate. That's just what they do. And so, and we need the whole country. If the country wants to live a better life, the whole country has to become aware of that and has to demand that we get, sounder money.
The system doesn't just tolerate inflation, it requires it. It is structurally incapable of surviving deflation. Every debt needs to be serviced, every bond to roll over. The moment real deflation sets in, the whole credit structure starts to unravel. So when the Fed eventually pivots, and they will, it's not because they won the inflation fight, it's because the system just inherently demands it. It always has, and it always will. That's the argument for Bitcoin that doesn't live or die on the price chart. In the long run, it always follows reality, not speculation, which is why, in the end, Bitcoin will win. Lepard says,
how do we win? We win when our money replaces their money, okay? Their money is evil, corrupt, planned by a bunch of central planners. And they lie to us 24/7, okay?
Strip out the emotion, and what he's actually saying is structurally correct. A system built on debt and inflation has a permanent debasement problem baked in. Bitcoin's supply schedule doesn't negotiate with that problem. It simply exists outside of it. So yes, rate cut expectations are a near-term tailwind for Bitcoin's price, but the bigger point is this. Every pivot, every new money printing cycle, every inflation surprise just makes the long-term case for Bitcoin stronger. The machine keeps running, and Bitcoin keeps absorbing the damage. When the macro gets uncertain, and right now it is very uncertain, the question isn't just whether to hold Bitcoin, it's whether you actually hold your Bitcoin. Because if it's sitting on an exchange, you don't. You hold an IOU. The Bitcoin Way specializes in helping people make that transition. Self-custody, cybersecurity, the whole setup. Free 30-minute consultation at thebitcoinway.com/simply. Tell them Satoshi sent you. Here's the thread that ties it all together. The day Bitcoin climbed back towards 62,000, memory and semiconductor stocks lost momentum. At the same time, on the same day. Coincidence or capital rotation? When the AI trade cools and the price action this week is already whispering that it might be, capital has to go somewhere. And we already know from on-chain data who's been quietly waiting to catch it. I also want to address something that I think explains a big chunk of the selling that we've been seeing this cycle that doesn't get talked about enough in Bitcoin circles, which is tax loss harvesting. Disclaimer, this is not financial advice. This is not tax advice. Talk to your tax lawyer or your accountant. Because if you don't know what that is, it's when you sell a losing asset on purpose to cancel out the taxes that you owe on your gains elsewhere. The NASDAQ is up 68% year to date. If you made serious gains in AI stocks, in tech, and SpaceX, chances are you're sitting on a pretty penny and a pretty substantial tax bill. One of the most common strategies that some people implement to offset that is to sell a losing asset, lock in the loss for tax purposes, and buy back in after the required waiting period. Again, this is not financial advice, but Bitcoin is down 29% this year. It is the perfect tax loss harvesting candidate.
And we ain't hungry no more either, bruh.
And some of the selling that we've seen, especially from short-term holder cohorts, isn't based on changed conviction necessarily. It's just simple accounting. It's people doing the math on their tax bill and making a mechanical move that has nothing to do with whether they believe in Bitcoin or not. That selling is, by definition, temporary. So when the tax motivation disappears, the stacks come back. When the AI bubble starts to deflate, the stacks come back. And when the rates turn, eventually, hopefully, the stacks come back.
Society's just breaking down. Like, I don't quite understand what's happening. And
Wow.
it all boils down, and you've pointed this out in your book, it all boils down to the money printer, ultimately.
That's exactly right. That's
So-
exactly right. I mean, that's in the money print. I mean, it's why we've got corruption in politics. It's all of it. It all starts at the sound money is the problem. Lack of sound money is the problem. And it's tragic, and we've got to educate our fellow citizens about it. They might get educated the hard way, which is unfortunate, but it might be how it unfolds. But I do believe in kind of a divine power. And I think, look, human beings are smart, and human beings, generally speaking, are great and ethical and want the best for themselves and their families. And, I think, your generation's going to fix this. I mean, we're going to solve this problem. This is the problem of our age. I mean, our grandfathers, stormed Europe to, save us from fascism. And you guys are going to storm the Federal Reserve to save us from the money printer and the corruption in government. And, it's going to happen.
So now let me put this all on the table. You have Cantor Fitzgerald, $26 billion under management, calling the bottom for October. You have whales buying $16.7 billion worth of Bitcoin in 2 weeks. You have ETF outflows reversing today after 10 straight days of bleeding. You have Larry Lepard explaining exactly why the system always eventually prints and why that always eventually benefits Bitcoin. You have an AI trade cooling and Bitcoin rebounding on the same day, and every single one of those signals is pointing in the same direction. Is the bottom guaranteed to be in? No, Cantor did say October, and we could see the low 50s before then. And I'm not here to tell you this is over with certainty because I know better and I don't have a crystal ball. But what I am telling you is that the conditions for the next run are assembling while you panic, while the culture is asleep, while the headlines are brutal, and everyone who came for the gains is looking at SpaceX and Anthropic IPOs and wondering if they made a mistake. But that's exactly what the setup has looked like every single time before the next leg up. If you've been waiting for a signal that it's time to start stacking, this week gave you several. Bitcoin Well makes it simple. Every purchase goes straight into your own wallet. Non-custodial by design, every purchase goes straight to your own wallet. No IOUs, 50,000 plus users, publicly traded in Canada, daily recurring buys, and right now, 3 chances to win 1 million sats just by using the link bitcoinwell.com/simplybtc. Here's what I want you to walk away with today. The people who made generational wealth in Bitcoin didn't buy the top and the bottom perfectly. They bought consistently through the noise, through the doubt, through the moments that felt exactly like this one. And then one day, the narrative shifted and they were already positioned. I was priced out of housing by the same inflation that Bitcoin is designed to fix. I have bills to pay. I have 2 kids. I'm not playing with abstract conviction, okay? When the price drops, that's real money to me and my family. And you know what? I'm still buying. Not because I'm certain about this being the bottom or it being the bottom even in October, but because when I look at the full picture, the whale data, the Cantor call, Dalio's warning, and the Fed hawkishness, the rotation signal, and just the general state of how fiat works, I don't see chaos. I see a setup. I see an opportunity. Now, before I close, don't forget to smash the like button, share the show with someone who needs to hear it, and drop a comment below because I read them all. Follow me at Internet Sophie and stick around because we put together a special 4th of July message at the end of this episode. You're not going to want to miss it. And if you want to be in the room where the next chapter of Bitcoin gets built, Mining Disrupt is it. July 21st through the 23rd in Miami, the world's largest Bitcoin mining conference. Nico and the whole Simply Bitcoin team will be there. Use code SimplyBitcoin for 20% off at miningdisrupt.com. Today is the 4th of July. 250 years ago, a group of people decided that the system they were living under was broken, that it taxed them without representing them, that it controlled them without their consent, and they did the hardest, most uncertain thing. They opted out. That's what Bitcoin is. It is the opt-out. For a generation that has watched housing become unreachable, savings get silently taxed by inflation, and wealth concentrate in the hands of people who just print money for free, you don't have to vote for it. You don't have to ask permission. You just have to choose it. Happy 4th of July.
Your Royal Highness, I come bearing news.
Yes, what is it?
Your Majesty, the American colonies have declared independence. That is treason. I'm afraid there is one more matter.
It cannot possibly be worse.
They've adopted Bitcoin.
What?
It's a form of money no crown can control. Impossible. Your Majesty, what do we do?
Tax it!
We can't.
Confiscate it!
It's self-custodial.
Arrest the inventor!
No one knows who he is.
My whole kingdom is falling apart. Is this really how it ends?
I'm afraid so, Your Majesty.